Welcome back to my channel. It's CJ Investing here, just with a quick video. I just want to talk about what I've purchased and why I made the moves that I made in my Roth IRA account. Like, I actually sold out of Home Depot to buy Visa, ticker symbol V. And I think that that's a great investment because not only do you get a small dividend, but you get a lot of growth as well. I think a lot of people underestimate Visa and its growth potential. Like, they're not paying out very much of their cash and dividends. They have very crazy profit margins. Like, I think their profit margins last quarter were around like 46, 48%, which is insane. I don't know if y'all could name any other companies out there that have profit margins of around 50%, which they had in the earlier quarters this year. But if y'all can, list them down in the comments below. I'm curious to know. But yeah, they're very profitable. They got a very low debt ratio. Like, they got very little debt on their balance sheet. And they have, I think, almost double the assets versus their liabilities. So they could pay off their liabilities with their assets, which is what you want to see in a company. So I think that's I think you should always look at the financials in that aspect. They're a little rich right now as far as their valuation of the stock price. I think it's right under 200. It's at 197 right now as of the close of the stock market on Friday. So is it like 197? I think you could still go out and buy. I picked up me some shares at 197. Like I said, I was going to pick up some shares under 200, so I went ahead and did so. But I don't think a lot of people even care about valuation like they say they do. Like, they just pick it up just based off of how much they like it and how much they believe in it. Not even necessary valuations like that. I mean, I know there are plenty of YouTubers that talk about valuation and everything, and there's plenty of stocks out there that are overvalued, especially like in the big tech stocks. But it's all about what you're willing to pay for it. You don't have to get caught up too much in the valuation part, even though it's good to get it at a cheap valuation. The cheaper, the better, because the better your returns are going to be in the long run. But you're going to make money anyways in the long run, as long as you're investing in a good company with good financials and it's in a good sector. As long as you know what you invest in. I like to say, invest in companies of the products that you use, so it's easier to know what it actually is. Like, I own plenty of Visa cards. I've owned Visa cards for years. I've never had like MasterCard or anything like that, so I don't know much about that. So it makes sense for me to invest in Visa. So I went ahead and did so. It was actually between Visa and Adobe, the Adobe stock, because that valuation has been cut in half, but it's still overvalued to me a little bit, at least to me. But I think Adobe cut their dividend or something. Not like it was that high or anything. It was one of the smallest dividends I actually seen in the stock market. But a dividend is something, especially when you're a dividend investor. And that's one of the things that you're looking for when you're looking to invest in a company. Like, when I looked at Visa, I never thought they had the highest of dividends. But as long as they do a paid dividend and they're willing to grow that over time, I'm willing to invest in them. But, I understand. Well, I understand both Visa and Home Depot, but Visa, I actually use more of their products. I was thinking about what products I use on a daily basis, and Visa was one of them. And I was thinking about the profitability of the company and how they just completely dominate their industry. When I think credit or debit card, I think Visa. And I think of their many partners out there, how they're worldwide and everything like that. Even though MasterCard has a bigger market cap, I think it's like over 300 billion. Visa is like 200, close to 300 billion. But I just think I think Visa is a better investment. And that's not just me being biased because I own a Visa card, but I just like the company better. And don't ask me to name the CEO. I'm not too good with names, but I do know that they're doing good things, like the management team and everything like that. They're growing their margins, even though it dipped back a little bit. But even when Visa margins dip back, they still have better margins to like 90% or 85% of the stock market. So that's another thing. I'm thinking about people with payments. I'm thinking about payments. People are always making payments regardless of if we're in a recession or not. They're always going to go out. They're going to use them credit cards. They're going to use those debit cards. So, and they're increasing spending. Like over quarter, more and more people have debit and credit cards. Like I listened to their earnings call several times, and their numbers are going up, not down. Meaning more people are making transactions. So at one point in time, they said crypto was going to kill that, as far as the Visa and the debit and credit cards and everything like that. But Visa is actually, I think they're like partnered. I think they like enable crypto. Like they're crypto friendly. They're incorporating it into their business. And I think they already have. So I don't think Visa is going anywhere for the foreseeable future. So I do believe it's a safe investment. I believe the dividend is safe. I think it's like 0.75% or something like that. It's probably comparable to like Microsoft's dividend. But if you're even worried about the dividend being so low, I mean, think of Microsoft and Apple's dividend, Nevada's dividend. And think about all the companies out there that don't pay dividends, like Google, Amazon, Meta. And we still invest in them. Even though the growth isn't like super insane. I mean, they have a lot of growth, but they're not growing like they once were back when they were coming up and few people knew them. So we invest in companies that don't pay a dividend. A lot of us, just because we like their products and we believe in them so much. So it's just based off of what you feel, how you feel about the stocks. I mean, obviously the financials are very important, but it's based off of what you like. So always do your due diligence, do your research before you make an investment. Don't take any of this as investment advice, as I am not a financial advisor. I want to emphasize that. But yeah, I just wanted to do this short video. As you can see, I got my workout gloves on. I've been working out about 3 days a week. I have to get it in. Consistency is key. You know, just like I try to invest in my Roth IRA at least about 3 times a month. It just automatically comes out of my account, my Fidelity account. I got it set up that way. Just simple and easy. But I won't take too much more time of y'all's day. I want to thank y'all for tuning in again. I appreciate y'all. I love y'all. And I see you back on the next video. All right. Peace.